Good afternoon, and thank you for joining us today. My name is Tim Lee. I'm a research analyst with Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on gold and copper, or primarily gold exploration and development today. We will hear from Kim Tyler, President and CEO, and Gary Nassif, Senior Vice President of Stratabound Minerals Corp. During today's webinar, they will provide an overview and outlook. Then we will take questions. You can type your questions into the chat box at any time, and we'll get to as many as we can. Before we kick things off, first we need to discuss the fine print. During this Stratabound Minerals webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined on page 2 of the Stratabound corporate presentation. That can be found on the company's website, stratabound.ca. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures pertaining to Stratabound. So after a transformative acquisition in 2021, Stratabound is now primarily focused on its flagship Fremont gold project located in the storied Motherlode gold mining region of California. The project hosts a historic mine and current million-ounce resource, and Stratabound is poised to advance the project toward production. The company also has several interesting exploration stage projects across Canada. With that, I now turn it over to Kim and Gary to update our audience on the company.
Thank you, Tim. I hope you can hear me. All good? Thank you, and thank you everybody else for coming in today to listen to our talk and hear about what we're up to. We're a very fast-moving company, I'll say that. And those that are looking for investments in the junior gold sector, we think we're a good opportunity to get into. We see, on the whole, the company has moved swiftly from about 2017 to today. You noted probably in the leader that was sent out to everybody that we've moved very fast. In 4 years, we've assembled a very strong team, very capable team. On the average, everybody's about 40 to 45 years of experience. We ought to be out golfing and enjoying life another way, but we really enjoy building mines, and that's our background, is building and operating mines. And we see a huge opportunity that's been going around for 10 years. The sector's been in a terrible state, not a lot of funding going into financing metal projects, whether it be gold or base metals. And we see these opportunities, projects lying on the ground. And I often say that the opportunity is very similar to the real estate market was in 2008, when that market crash happened and all kinds of real estate in North America was very inexpensive. And we see the same thing right now. The big companies aren't picking up on this. They're too busy consuming each other. So we move fast. We've raised $20 million. We've acquired some early stage exploration projects. But really what we are is mine builders and operators. That's our background. And myself, I've worked for big companies. Like in our team, we work for companies like Kamenko, Teck, Inco, Vale, Rio Tinto, a variety of other companies, all big companies, and we work for small companies. So we're out there, we built them, found them, built them, operated them, shut them down. We've even seen bankruptcies. We've seen the good, the bad, and the ugly, and over again. And we want to apply ourselves now to build the next big company going forward. And we want to do this with this acquisition we just made in California. The market hasn't picked up on this yet. We've launched from an exploration company, from 2 exploration projects to now a company with nearly 1 million indicated and inferred ounces in an instant, and the market's still valuing us, as it has the rest of the sector, as if we're just a junior company with no real assets. So I'll launch forward into it. It's a big re-rate opportunity, our share price, and we'll talk about it. I'll take a brief minute here. Forward-looking statements. Myself, as well as my peers, tend to fly through this really fast, but truth is the junior mining sector is very risky. And although we have a plan to move to production, we believe we're competent, capable to take it there. We'll hope to convince everyone. We really believe in ourselves, but there is every risk that it might not make it for various reasons we don't control. So we want to comment on that before we go forward. So what's happened to us lately? Well, again, we had 2 exploration projects. We had no ounces on the books. It takes a long time to take an early stage exploration project to getting ounces and into production. So we knew we were sitting in an area where we were in a peer group of about $14 to $17 million market capitalization. And we knew we could be and wanted to be in that $80 to $100 million market cap. And the way to get into that peer group was to have 1 million ounces on the books, a decent 43-101 ounces. We've been looking for many, many years, California in particular, we really like California. We like it, and I'll say it up front, we like it for the regulatory and permitting reasons as much as the number of ounces that have been produced in California still to be produced, we believe. So that's where we've gone from, but the market hasn't picked up on this. We acquired it in an exchange of shares. We bought California Gold Mining Inc. It owned the Fremont project. We exchanged 65 million shares for a Stratabound for their shares. It's now a wholly owned subsidiary at an enterprise value of US $9.26 per ounce. And I repeat that number. We acquired nearly 1 million ounces of NA 43-101 ounces at $9.26 enterprise value per ounce. We feel we're extremely undervalued relative to our peer group, and our peer group itself is undervalued. And so anyway, we'll move forward. The strategy here is to build a gold mining company and keep on going from there. So where are projects located? Our main one, Fremont, one we just acquired, is in California. This is the flagship now. This is the new one we're focusing all our efforts on. We have 2 early stage exploration projects that I like to say, quoting Wayne Gretzky, where the puck will go next. We're not in the hot real estate markets where they are right now. We're not in Newfound Gold in Eastern Newfoundland, and we're not in the Osisko area, not in Red Lake. We think these are the next hot areas, and we'll talk to those two. These other 2 projects, Bathurst and Dingman, are projects that are going to sit in the back burner. They're not costing us anything. They have little holding costs. We don't need to do anything with them. They may be for sale someday, but they're not our concern. We're focusing on mainly Fremont, like 70%, and the other 15% each would be on Golden Culvert and McIntyre Brook. Vision. I'm going to repeat this because it's worth repeating. We want to grow from a junior exploration company into a gold producer. Strategy is a bit different. This is important to talk about too. We've been looking for projects that we could start off that it can be very large. There's 20 million tons at the moment at Fremont in the resource sector, but we can start off very small. We can look at starting off at a 50,000, 100,000 ton heap leach. This is very inexpensive. It can be high grade. Heap leach is perfectly fine in California. It's already being done. We see this way to start and bootstrap the bigger operation. As you're building that and quickly get cash flow fast, we minimize the front end capital. We're looking at millions of dollars, not hundreds of millions of dollars or $500 million, as other mining companies tend to do. Walmart and McDonald's didn't start instant. They started with one little operation and they built out, and that's the way we're going to do this too. You don't scare people with talking about big holes in the ground. You talk about we're going to start off small, see how that works, and clean up and do our work, tidy up along the way for the people in the community, and also the regulators will see this. We want to see success, assure success going forward, and build out from there as we learn and bring more people on board. This is what I talked about. We aren't out here marketing to raise money. I want to make that point clear. We've already raised money. We've got plenty of money going into this project. We raised $2 million before Christmas, and we had money before that anyway. The point of this discussion and getting out marketing is we feel that the market hasn't been much interest in competition with Bitcoin and cannabis and hemp and all these sort of other things. All these industries that never existed 10 years ago are stealing the lunch from the junior mining sector, and that pool of capital is spread pretty thin. So we see that the opportunity for lifting is tremendous for us right now. We did this exercise when I talked about acquiring enterprise value per ounce at $9.26 an ounce. We're still sitting there. It's not been recognized that we're sitting now in a peer group that is at $37 an ounce as of last November. And even last May, it was $53 an ounce. There's been a 30% drop in the sector. So if you're interested you should be considering investing in the junior resource sector because we're in the down cycle. It's cyclical. We're at a down cycle, and I think it's going to peel back up again in the next year. Your crystal ball may be better than mine, but that's what we see. And in any case, that 30% drop in the individual companies is only reflective of a 5% drop in the gold price in that time. Yes, gold's below $1,800 an ounce today, but we expect it to come back. And anyway, we see opportunity is pretty good to grow this company very inexpensively. So we're sitting down here at 17 million market cap. To be in this range, we should be at 86 million. If we were in this range, we'd be at 100 million. So the point is, if you want to get in, we're not raising money one more time. This is the entry point. If you think it's not going to go any cheaper, this would be the time I'd say if you're looking for good investment. We're in a depressed sector, and we're 76% depressed below that sector. So it's a pretty good time to get in. We know our job is to get out there and demonstrate we can do the work, and that's what we're going to be talking about as we go forward into 2022. This chart is our share price over time, going back to roughly about 2018, shortly after we all joined or started joining aboard the company and turning this shell around. Our share price sat around 8 or 9 cents. 2020 was a good year. The gold price shot up to $2,000 an ounce, and our stock price jumped up to 30 cents and it hit a high of 38 cents at one point. only on the gold factor. So we're just mainly showing that the gold price does this. We lag a bit behind it. And this chart is the same for every one of our peers and the juniors. And even the big companies follow the same chart, the Barricks and the Newmonts and Gold Corps and so on. They'll follow, Newmonts and the Barricks will follow the same pattern here. They follow the gold price. Gold price has dropped down and lagging, so is our share price. But this is the unique catalyst rate, or should change, and the market should catch up. No ounces, nearly 1 million ounces indicated and inferred post October 15, 2022. But the market snoozed through it. It's tax selling season and people are doing what they do. But time for the market to wake up and see the opportunity in the sector, but also a Stratabound as well, I would hope. A little comment on capital structure. We have 175 million shares out there. 65 million shares of those came from the acquisition of California Gold. That's the share exchange I talked about. Long-term private holders, about nearly 40% of those is a company called Coast Capital, based out of New York, a private investment bank. They handle private money, family money, and so on. They've been supporting us all along. So they're in for about just under 20%. Under board and management, I own 1.5 million shares myself. Total management largest shareholders are 51%. So we have got a lot of stake in the game, a lot of skin in the game, with a close space of strong supporters. Talk about California. Why do we like California so much? What the biggest reason? I guess there's several good reasons. I mentioned permitting is actually a very good reason, and we'll talk about that. But I'll start off the fact over 100 million ounces of gold have produced in California since the 1849 gold rush. Half of those ounces came from lode gold deposits, and in the Mother Lode gold belt particularly. But all the mining stopped in World War II with the advent of Pearl Harbor. There was a moratorium, a War Measures Act came into play, and mining stopped. The miners went off to fight the war, and most of these mines never reopened. This is the truth in California, as it would be in Oregon and Washington and even Arizona, where we see similar opportunities. Many mines never reopened, and this is at $35 an ounce. We're out looking for projects, brownfields projects that shut down when gold is at $35 an ounce. Osisko did the same thing in Malartic. They went back and they're doing it in Timmins right now. The old Hollinger mine, the Pamour mine were operated back at the turn of the century when gold is $25, $35 an ounce. Now they're building giant open pits around them and coming in and getting gold at $1,800, $1,500 an ounce in that range, and doing quite profitably. So that's what we see, these opportunities. And they're lying about in the Western U.S. Because the U.S. is not necessarily a resource-based industry. It's everything. That's a small component. Canada resources are big for us. Small population, big country. Resources are what we do, and we know best. Now, finally, permitting. This has been the other opportunity we've seen, particularly in California. It used to be believed, and I'm going to do a myth buster here, that used to be believed that permitting in California, well, you'll never get a mine in California. They're so opposed to it, no matter what it is. They're against it, whatever it is. But that's not really true. It depends where you are. In recent times, Equinox, a $1 billion market cap company, Ross Beatty company, a famous name in mining, he just opened up Castle Mountain. They opened up Mesquite in the last year or two. They're operating quite well. They're doing heap leach. They're using cyanide, using it safely, and that's fine. They're just doing that. That's just fine. Another operation not on here is Rise Gold, another junior in our group. They've just got a permit to go into production, and they got it done in 2 years. In 2 years, they got, and that's on their press release, in 2 years it took them to get a mining permit. And the reason a lot of this works better in the States, we realize, I have experience. Our team we got Americans on the team. You're dealing with the county when it comes to permitting. In our country, in Canada, you're dealing with the province. So it's very, very difficult in a province like Ontario, where most of the population and the voting population, the politicians come from the Toronto area, and they're not really interested in what goes on in Northern Ontario. And the lightning rod for that would be the Ring of Fire. In our country, mining tends to be very politicized. Down in the States, you're dealing with the county. And if you're in a county that is maybe mining friendly, which we believe we are, the Mariposa County we're in is a mining history. And you can see that in the photograph up here, very empty country, very unpopulated, ranching, and some tourism. You're seeing the actual site right here. So we have been talking to the permitters. We have a very good conversation. The regs are no less stringent as anywhere else on the planet. We tend to meet and actually exceed any regulatory or social responsibility going forward, because the mining industry really needs to do that. And we stand it to gain. Again, going back to that early thing I talked about, the staged small, build the large, you got your hands around that a lot tighter on doing a decent job and being responsible and not letting things fall apart. if you start small and build large later. So that's our plan. And I'm going to comment once again. We think permitting in California, if it was ever bad, it is not already near as bad as things are getting in Canada these days. It's getting very, very difficult to permit, 15 or 20 years or more to get permitted at a project that's at this stage. Beating that topic to death. What else do we want to know? Go into the weeds more at Fremont. It's 3,300 acres of private land in Mariposa County in California. I commented it's a very underpopulated and it's in a depressed economy. It relies on tourism. Tourism's been hurt hard with COVID, and ranching, and not much else goes on in Mariposa County. And north and south of it, it doesn't either. There's been mining done. It's been a bit de-risked for the fact that there was mining done in the 1850s to 1944. They produced 126,000 ounces of gold at about a bit better than a quarter ounce at 8 grams. It's high grade. There's high grade there, and they mined it conventionally, and it was done gravity, the typical methods you'd use. It didn't require cyanide leaching or that sort of thing. They would have done it old school, pick and shovel. So they did quite well. They put 2 shafts on the property. You see them on this. You see them here. I'm going to do the screen share on. Sorry, I'm not doing the wrong one. I did the wrong thing here. I want to do this one. And I'm going to point out right here are 2 shafts. Here's the main million-ounce deposit shown here. 2 shafts on it, Pine Tree and Josephine. Today, putting a shaft, a brand new shaft, would be starting price $100 million. These are assets that are on site. They're old and need to be refurbished, but that's still not full on putting a new one in. And lots of underground workings that are on the property too, going back to the 1850s. So the other things boxes are ticked off. We have power on the site. Here's the office building. We're looking from the deposit back to the west. You see again, more open country, no neighbors out there. Nobody get concerned about mining too much that are local. Power line right through the property. We have access. The mineral rights mean the surface rights. Private ownership means we have the surface rights, the mineral rights, and the groundwater rights. Water is very important. Water's at a premium. Near desert conditions. Those old workings, we've calculated the volume of the old workings. There's water coming out at surface. So it's a large reservoir of underground water. We figure 40 trillion liters of water exist today in those underground workings, more than sufficient to do for the mining processing we need to do. We can recycle all that water as well. And it's something that's there after the mining is done. We have a sustainable resource in an area where otherwise you have to build surface reservoirs of water. This is something we can leave behind for future generations. You're looking at the main deposit in brown, but we have mineralization I'm going to talk to next of zones across the whole property that have where they has been explored. Very similar grades and results you're seeing in the main zone. Point being, lots of opportunity for expansion and resource expansion. I'll quickly talk to this left part of the right side of this slide. The resource we have indicated here, indicated in inferred ounces, are only in this blue open pit shell you're seeing here. It has not been evaluated for underground. What we're looking at is a cross section, surface here, you're down underground here, the drill holes. Purple rock or waste rock, brown rock is waste rock. The old mining would have been these red veins. The old hammer and the old pick and shovel stuff would have been these veins in the hanging wall and the footwall. But what was left behind is all the yellow material, and that's a lot of the low grade. That ore is what is called refractory. That means it has to be make a concentrate, and it would have to go to a roaster. And roasting is not allowed in California, and that's all okay. We don't want to build one anyway. There's lots of roasting capacity in Nevada. There's old mines that are looking for feed. We're aware of that. And anyway, you can truck your concentrate to 70 miles up the road to Sacramento, the deep sea port, and you can sell concentrate around the world. But there's 3 styles of ore. Only one of them is this yellow type. There's 3. Near the top is the oxide cap, and this is the beauty of this that we like. An oxide zone is perfect for what's called heap leach. Heap leach is super inexpensive. It's an excavator and a couple of tandem trucks. You build a pad, you pour solution on it, and in 10 days, you're receiving 93% gold recovery. That's a pretty good recovery, but that's not off the lane for what Nevada does in heap leach. We have a heap leach component, very pleased with that. This is how we start the company off. This is how we keep our risk down low, and we use that money, that cash flow that comes in the first couple of months of operation into the next year. You turn that money right back into building a plant. You don't need to build a big plant off the beginning. You can do that down the road. So again, that's and some of this work that we have in hand is PE level metallurgical work. A lot of the engineering work has already been done. This slide I'll talk quickly too, but it does discuss the opportunity here. The resource estimate is just this blue dashed outline. You see all the diamond drilling. It's a long section. We're north to this end, south to this end, and you look at the underground is down here and surface is along this line. There's not a lot of work done on the property. Chicken Gulch has 2 sections drilled, a half a kilometer apart. Not dense enough drilling to do a resource estimate, but those results are very much the same as the main zone that you're seeing in here. Same thing can be said for Queen Specimen. The previous company that owned it, we took out, did some drilling in there. They put in 25 drill holes. We'll be working on seeing if we can get a resource out of that. But I'm going to comment again. There's two paths we're taking here. Path to production is one, and we're working on permitting to do that, and all the work required to get a preliminary economic assessment together. But the second part would be expanding on that resource potential. Can we take 1 million ounces, which sits in this 10% of this larger red outline? Are there multiples of 1 million ounces to be explored for? Well, the only thing I can tell you is that the drilling isn't dense enough, but what drilling there is has similar results to what we see here. So far, there's no showstoppers that would say you can't do multiples of millions of ounces. We'll continue to do the work, and you watch what we do going forward. That's it. Almost it for Fremont. We have a team that's used to building mine plans and designing mines and operating them. This is a fairly simplified model here of where we're going, but I commented the one thing we can't get away from is a minimum of 2 years of environmental baseline sampling. That means every month we got to go out and collect water samples, and when we put all those samples together and determine what were the conditions like before any mining started, it goes into a report. That report submission goes to the county authorities, and they'll run it through every other authority, but they're bird dogging, they're leading the whole thing. And somewhere in the Q1, Q2, Q3 of 2024, we hope to get an approval to go forward with our mine plan. In the meantime, lots of other engineering work's going on, some diamond drilling, definition drilling. So that where we start, we're very confident of. We're going to get the results we expect. More metallurgical test work, trenching. That's the one thing we'll be doing shortly, is we're gearing up to do some trenching on there very soon. So there's our plan going forward. Now, enough on Fremont and California. I'm going to talk to that's the stake in our story, as the investors like to say. The sizzle is this: the opportunity for the word escapes me now, but for exciting new stories to tell. The operating story is a good one, but it's a little ways to production, and it's all about putting cash in the company that we can use to acquire other projects and build a company going forward as a bigger company than just sitting static with a couple of assets. So we feel that the Eastern Yukon, which is not relatively that explored, is an exciting place. Again, the Wayne Gretzky analogy here, where the puck is going to be, where the real estate's going to be hot next. We picked up a property, but from prospectors right next to the Three Aces project. That was a 5,401 gram per ton discovery in 2003. That's an enormously high value. They got lots of high values since then, back since 2003. The market got quiet and got cooled on gold in particular. Seabridge Gold just came in. It's another $1 billion market cap company. They acquired it about a year ago, and they have plans to be in there this summer, I believe. We have 99 square kilometers. We have a 10-year Class 3 exploration permit. Not many jurisdictions you can go to that you get a 10-year permit. There's certainty around that. We have a plan it includes up to 25,000 meters of drilling, roads and whatnot, trenches, and we don't have to go back every year and do consultations and have the government drill us over another permit. The permit's done, and the Yukon government takes its responsibility to consult with First Nations, as we do too, in that area, and things, and it just makes certainty around being able to develop your asset. We have an all-season road through the property. You can drive right through, although it's the Yukon. You can drive right to it. Don't need helicopters. When we acquired the property, it didn't have very much work, but a soil sample on it. We raised $1 million initially in 2018, and since raised more since then. We put in 25 drills, 24 trenches with high-grade values. I could talk more and more about this, and I'm not sure where I am with time, but I'll skip to the next slide and say this is the work that was done. It's a busy slide, and I don't apologize because it shows we did an awful lot of work with excellent results. All the purple values would be bonanza values of 320 grams per ton, 118 grams per ton of visible gold, 92, 155. The red values would be what you'd mine for underground, 4, 5, 6 grams and up. And the green grades would be typical grades you might see in an open pit. So the opportunity here is 6 parallel zones we believe we've got. Each one of them has a vein in the center that runs high grade, and flanking it in the wall rocks, similar to what I showed in California, you've got low grade disseminated gold in the wall rocks. It's highlighted by this green outline is a soil anomaly. But all this work we did in the last couple of years, where I said we raised about $20 million, good chunk of it went into here. This is only a kilometer of strike, which represents on this slide, this little box here. We really control this whole amount of property. We knew nothing about the rest of the property. We focused our work on here. Do we have something that looks like a mine here or not? We asked ourselves. So we went about convincing ourselves that we think we do. Time will tell, and we can't say that there is. The work's been done to encourage us to keep going. So that green anomaly, that soil anomaly, is what you do in the Yukon, and you do it anywhere on the West Coast. It's very successful. in the Western Yukon, the White Gold District, they talk about soil samples all the time. So plus 20 ppb parts per million gold soil anomaly. What we did this year was we did nothing about this property, did all the soil sampling, seeing all the dots where people are out collecting samples. We've got 7 kilometers here alone of new soil anomaly, which nobody's been on the ground to follow up. What is that all about? And the same thing to the north. We don't know what's happening here. We do know that we had a discovery back in 2019 of a vein that ran about, I think, around a half a gram. We didn't do much work on it. We did the soil sampling since, and it lies on this line. So the opportunity lot for similar results as what I just showed you in the previous slide may occur here. We have to get on the ground after the snow's gone in the spring with our hammers and boots and start breaking rocks to see what we've got mapping in the usual route. And if we get confidence in there, then down the road, maybe a year later, it might be drilling. We'll see what happens. But we just got to get on the ground first and look at this because nobody's really been on it to see. Our other property, I don't know what time we got left. This is a really important slide. This is for anybody that's been following the excitement and the hot property in Newfound Gold in Eastern Newfoundland. I started working in Newfoundland when I was in my 20s, and you would hear my colleagues and peers say, "Oh, don't go there. You won't, little bits of gold here and there. You won't find anything of value." Well, that's wrong, really, really wrong. And time again, I love to hear those stories because that's where I want to go, where the old wisdom says, don't go there. This line, this dashed line, is a line 400 million years ago where Africa and Asia collided with North America and Greenland. And there was one mega continent called Gondwanaland. It has since broken up into the continents we know today. But where it collided, it squeezed these rocks, and fluids escaped through and leached out metals like gold. And there's deposits all along this line. Ireland and Great Britain are once actually directly connected to Newfoundland, and now they're spreading apart along the mid-Atlantic ridge. But all along that line, you find gold deposits. Dalrani and Kurganalt, that's a recent mine in production, very high grade, very strong, very high grade mining operation, very successful. Followed along, and yes, you go look in Newfoundland, and you're going to find gold right along that line. There's some operators, Anaconda Maritime Gold. Hopebrook's a former producer. Let's track that line along. You go far enough down to the my whiteboard on here. That's right too. So go far enough down to the Carolinas. Down here you see Hale and Ridgeway, and those are Oceana Gold. They're New Zealand, another $1 billion market cap company. They're mining there. It's all along this line. So what's happening in New Brunswick? Who's been looking? Nobody but prospectors in recent years. And again, they've been finding gold in stream sediments and rock samples that has been ignored by the bigger companies in a long time. So we picked up a property, and we're right next to the other news for us is that we picked up this property in blue. Sorry, originally in green. We picked up more properties since. There's gold in the area. Lots of prospectors finding gold. That suture zone is right along here. We're looking for splays, these faults that run off of that. And we're looking for these yellow rocks. They're called rhyolites. Beside us, Puma Exploration. I encourage you to follow them too. We're hoping that we can, Puma and us can talk together about a new camp that's developing that's not been caught fire yet. There's more than strong smoke in this area for results. They just did some work recently where they published in September, 5.5 grams over 50 meters in the first drilling on the property ever. So that's extraordinary. If that happened anywhere else at a time when people are interested in gold, that stock should have gone through the roof. But just like our stock got punished for our good deeds in October, they did too. Their stock price dropped 17%. It makes no sense, but that's what the market does sometimes. Go figure, the market is very fickle. They've got an excellent property. Just the other day, I think they published 370 grams on a gram sample right on that same showing. It's moving along very well. Theirs is advanced. Ours is not quite as advanced. It's the same thing. We got soil sampling done with anomalies. And our plan next year is to get on those anomalies, like in the Yukon, when the snow is gone, and start hammering tongs and look for these yellow rockiness. That's the same thing. They're following these rhyolites, which go right through our property as well. So we think we got a pretty exciting property. Stay tuned to that story. If it's even half or a quarter as good as Newfound Gold, it's a pretty darn good story to talk about. And the geology says it's the same thing as Newfound Gold, Kurganalt, and Oceana Gold. Same rock, same age, same processes. The right place to look. So that wraps up. I'm back to the beginning and repeating back to the, as P.T. Barnum says, first you tell them what you're going to tell them, then you tell them, then you just tell them what you told them. So going back to all that, why invest in Stratabound? Well, one, we're in a gold junior sector. If you're listening today, I think you should be interested in investing that market because it's a good time to buy when it's cheap. But we're also depressed 76% below our peer group right now, and the market just hasn't. I think we're moving faster than the market can keep up. And so what? The market will catch us one day. Meantime, our real plan here is to put a mine in production, pay ourselves, and use that to build a real mining company. We got a strong management and board. We just put a press release out about a week ago. We got about 6 new people on the team. Very, very sharp, seasoned consultants. 2 of them from California. The top permitter in California is with us, working on. He's permitted mines already in California, so we're very comfortable where we're going ahead. Very, very confident in ourselves. Very confident in our choices of projects. I'm not confident in the market, but we're durable and we can resist it. So I'm done, and I'm going to say thank you very much. And if you've got any questions, I'm not even sure how much time I used, but if there's any questions, I'd be happy to answer. Hand it over to Tim.
Great. Thank you very much, Kim, for an informative presentation. We'll now start the Q&A portion of the webinar. A reminder to everyone on the line that you can type your questions into the chat box at any time. And we already do have a few questions. First, what do you see, and you did have the timeline there, but what did you see as the earliest ballpark date that you could be mining gold on at least a small scale in California?
Well, we're setting the mark high, but we want to follow what Rise Gold just did and be there in 2 years. Now, I'll say forward-looking statement, anything can happen, but if we get there in 2 to 3 years, I think we've done an exceptional job. I cannot see that happening in Canada anywhere, that you can take a project like this and get it done in under 10 years. So if we can do it in that time frame, I think we're doing well. Hopefully the market's timed to this as well. I think the market's been down really, really low for 15 years. How much longer it can last, it's not possible. So hopefully that timing is right, but that's about the best we would expect.
Great. And then kind of stretching that forward, obviously you'd start with the heap leach of the oxides. How long did you look for that before you would start delving into the sulfides and potentially likely shipping that over to Nevada?
Yeah, so the oxides you do on site. This is oxide is the typical ore for heap leach. I've been involved in vat leach, some heap leach as well. We got people who are very experienced in it. It is really simple. It's like I said, repeating here before. It's rotten. It's the sulfide ore that's decomposed. It's rotten. It's almost the consistency of earth. In some cases, you use an excavator truck, a couple of tandem trucks. You build a pad. It takes you maybe a month to build a 50,000 ton pad or less, and you start leaching in 10 days. Not pure gold, but you're getting gold to a refinery at that point, and that would be the process, but you're quickly making cash flow in time. We've been looking for projects, and the same thing one project we talk about, we have a copper project in Brunswick, it's the same thing we looked at. We've been looking at projects, can you get in for $2 to $3 million, make $5 or $6 million in a couple of months, and that's how you start. And if it's got more legs than that, a bigger, if that's all it is, well, you've made some money, and we're miners, that's what we do. But if you can take that into a 20 million ton deposit and use that money to build out a bigger plant, well, that's where we want to go.
And one question here, obviously you're still in the evaluation process, but do you have an estimation of costs and potentially even cash costs or all-in AISC?
If we have, I'm not telling anybody, because that would get me in trouble with the regulators, wouldn't it? That would be one thing we're not allowed to discuss without a PEA or an NI 43-101 report, so won't do that, no. People, that's where I say to people, they have to do their own homework and look at what we've done. And a lot of people are analysts, that's their job. But we're hoping to get in front of analysts now. That was the other comment about why we needed to leapfrog into a new peer group. Mining analysts can't evaluate a company when they only got exploration assets. But when they see a project in front of it, they can do that work, and they can do their own discounted cash flows. Yes, we have a discounted cash flow. That's my meat and potatoes for the last 20 years. And a lot of us, we got people in our company are chief operating officers have worked from the ground up, and presidents of companies that have done this over and over. Yes, we do have that. But I will not release that, because I would be in violation of the rules for NI 43-1 and the regulators.
Sure. And kind of shifting here a little bit to Eastern Canada, could you point out where your project, the McIntyre Brook project, is relative to Puma's project? They say that Puma's been putting out some good results.
I really say, look at what Puma's doing. We have no problem marketing them, because their success is ours. But you need to give me the slide deck back again. If you can do that, they have the property immediately to the one more. Yeah, okay, that one right there. So too many. Go back to 18. There you go. Stop right there. So this is us. We originally staked the green outline, then we staked the blue outline. Acquired it, optioned it. Puma subsequently came in and picked up all this ground here, and they are right here. So their big target is right here on a rhyolite unit, their O'Neill zone. and it stretches up through here. They've also got results in soil anomalies on these rhyolites that come right through our property as well. So their big success is right here right now, but they've got results all over the property. You can see all around it, but they're right to the immediate west of us. Okay, sorry, I can't hear you, Tim.
Sorry about that. I muted myself. Circling back to California, can you did talk a bit about the permitting process, but you can tell us a little bit about what the milestones are and the steps are in the permitting process toward starting production?
Yeah, and it's for investors. I want to appeal to investors again that think a little longer term. And again, the Sizzle part of our story, the speculation will be our Canadian projects, because mining projects are kind of boring at this point. We'll be doing the permitting. It requires we're getting that right now, which is sampling, environmental, all those things that go into a big thick report about a foot thick that will go off to the regulators. So that's not terribly interesting. We will be doing some trenching and drilling. We'll be focusing on the areas we think are the highest grade parts of the heap leach. We have to get a better valuation on the heap leach. That's part of the work we'll be doing. The oxide zone, that is, rather, that will be for heap leach. So that'll be our focus with trenching probably at surface and some short holes. We're gonna hide away from probably some building ounces by drilling deep at the moment. We'll try to build ounces as we can. That's prudent. That fits the plan. We see the opportunity. It's very, very enticing to go put drilling everywhere all the place, because you can see that you're probably going to get a lot of good results. But we'll put that off to later, because really now it's going to be about, again, repeating your permitting, engineering. That Gantt chart, that bar chart I showed, is all the work around what we're doing going so far in California. Gauging local communities, all that stuff you got to do, and making sure you get people working with you, and you dispel any myths or any problems, or get in front of them before as well you can.
Great. And how does the permitting work for exploration? What are you permitted for currently?
We have a permit. It's a little unusual in California. In Canada, when you have what is called patented land, you can do just many things. You can build roads. You can do what you want. You own it. But in California, and I think in the States in general, you can own private land, but it's almost administered in the same way that you would need to get a building permit if you're going to do something on your own private land. In mining in particular, it's been under, and it's not that difficult thing, but we permit right now that allows us to drill, I think 20 some drill holes if we wanted to on a portion called the Queen Specimen, and allows us to trenching right now. So when we're getting set up to do some trenching, we thought we had a drill lined up, and the driller scuttled out from under, so must have got a better deal. So we couldn't do that, but we'll have to put in a permit, and it's not unlike permits you would do anywhere. Again, you're dealing with the county. It comes swifter and faster, and they're very reasonable to work with. But that's what it's allowed so far. That's all we require to get to move forward.
Great. And then talking about local community relations, what are your relations like with your projects in Canada, particularly in the Yukon? Do you have a relationship there with First Nations, or what is the situation up there?
We've reached out to them every year. With COVID, it's been tough. We're in an area of the Yukon that was going through a lot of its own internal political turmoil. We're in the area of Watson Lake. We've hired on local people and so on. We aren't advanced enough yet to get too far with it. We haven't done things like impact benefits agreements. It's too early stage for that. But we have reached out. We've talked with them over the internet and so on as best we can. But we haven't moved beyond that, and it's early stage. What I do like about the Yukon, it's different there in Ontario. I had a lot of success in Ontario, but in Ontario is a bit of the Wild West because the industry had to go do the consultations. That's the law says. That's what the industry was doing for quite a long time. In the Yukon, you go through carefully with the Yukon government. They do the consultations. It's our job to communicate as well with them. But it's clarity around what you do. It isn't one company offering the moon to somebody and then nobody else. It sets everybody's got the understanding of what's going to go on here. I think the Yukon, you got to understand, Yukon is a very, very thin. I think 40,000 people live in the Yukon. Most of them are First Nations communities, and a lot of their heritage and history has to do with mining as well. It's resource based, so it's a little easier to work in that area than some places in Ontario. I worked in northwestern Ontario. I had very good success working there and completing exploration agreements in there as well. But it's part of the job. You're dealing with another couple of levels of government where you might be dealing with the province or the federal. You're also dealing with First Nations community as governments. It's been good to us in the past. Again, that's your question. Yukon, it hasn't got too far yet, but it hasn't needed to either. And there's been no request from the other side to on the other thing. In New Brunswick, we've gone a bit further. Our project out there is a little further advanced, particularly our copper cobalt one, and we reached out and had discussions. Gone very well out there. They're very resourced and they're looking to work together. So I found that very good in New Brunswick as well.
Great. And then looking here at kind of a question on the corporate level, what is your expected spend for 2022? Maybe break it down by the 3 front burner projects.
So we expect to spend about $1 million in California. That's hard dollars. We also raised in our last financing about $600,000 of flow through, and that's going to be split between the Yukon and New Brunswick. We haven't got expensive programs in our Canadian projects. It isn't required. We've done an awful lot of drilling in the Yukon already, and we're comfortable with that right now. There's not a necessity for more. What we've been looking at late last year, what's the rest of the property got? And we've done the soil sampling I mentioned, and it'll be inexpensive on the ground. It'll be setting up targets for drilling. I would think of the two, it's hard to say right now till the snow's gone, but between the two, we may have targets for trenching at the end of next year. So again, this money we've allocated is adequate to cover those projects off for what we see we want to do on them and move them along and set up for maybe 2023. Look at where the financing is, where it is, how we can do with financing, and then we have ready for drill targets in 2023. Unless something really exciting happens and we get like Puma's got your 300 grams per ton. And I think we'd be getting a drill in there pretty quick. But at the moment, we can't say that till we're in there on the ground and the snow is gone. So yeah, I guess to answer that question too, when we went into the acquisition, we had $5 million cash. We acquired $3.7 million of debt. The listeners should know that came with the acquisition. We can service that debt, and we raised another $2 million in November. So we have more than enough at that time to extinguish the debt or service it. We choose to service it. That's not a problem for us. We'll use the cash we got to move forward. It's not the worst in the world that less than half of what you have in cash already is in debt. We can work with it and move forward. The asset's just well worth it in Fremont to move forward with.
Great. And thinking long term, what is the long-term strategy for the company? Would you like to?
Yeah, that's exactly what the plan has been. And I think if you look at where we put out this notice to Red Cloud for this talk today, a little bit bold to say, but from shell to miner, producer, North American producer. And I want to comment again, we aren't a producer. We plan to be, and we're on the track for it. We're executing on a plan, but we knew all along what we want to do. We see more than one Fremont. We see a string of them. There's a lot of other projects out there that maybe 500,000 ounces have got a lot more going for them. The majors aren't looking at them. The intermediates are too busy getting gobbled up by the majors because the majors are looking for more feed. So we see this up the channel pursuit. We see the opportunity to put a couple more operations. Let's get one done and do a good job at it and get everybody to believe in us and say, you guys actually did do what you said you can do. So, okay, so we'll do it again. Before I retire, I'd like to do that. But also we recognize we're 40 years plus experience. We don't live forever. And I'm looking, what's hard to find are the younger people to bring in behind us. I would really like to mentor Gary Nassif is just rejoined us as senior VP. We got some young guys on the board, and I say young, he's in his 40s and he's ideally aged, but that's the kind of people we want to bring on board, if not younger, the young people, and interest them in why mining is a great profession to be in, a very, very responsible job to be in. So there's that. So the growth outwards is to build a mining company, build the next. I don't think it's crazy to think we could build another gold corp. We could have fun trying. We may not, but the attempt to do so, that's how these companies started. Rob McEwen taking that tired old mine in Red Lake, the old Dickinson mine, and turning it around and saying, there's gold here, boys. imagine his background wasn't a professional miner, so you can imagine what we think. Well, we can do this, so that's where we want to go with it. At the very least, it's going to be a lot of fun doing it, and that's where we want to go with it.
Great. We did receive one follow-up question back to the debt. What is the interest cost and maturity term of the debt?
We're renegotiating that debt, and some of it's going to be converted, and some insiders are working on taking some of that debt up. It's at 18%. We're going to extend it on for another term. We're working on that as well. The note holders are big shareholders of Stratabound. They were formerly California Gold. Again, we're not threatened by the debt.
Okay, great.
High rate of interest, but it's what it is, and it could be, it's very manageable.
So one kind of final question here. I think that covers everything we've received. Just to review, what news would we expect to have over the coming weeks and months from Stratabound?
Well, we've got some. We'll be working on trenching. We've got soil sampling results. We're still the assay labs are backed up, and that's been one I've been getting a lot of heat from shareholders, not understanding that assay labs, when things turned around in 2020, are really backed up, and COVID's hit them hard. But it's been, I think, 10 weeks we've been waiting for results from our assay results here in New Brunswick, in that blue area, and I'd like to get those. That'll be some news. It's not super exciting as drill results, but it is, it lends some comfort around what we're doing there. So it'll be that. We'll be trenching, starting hoping to get trenching going soon in California. Another reason why we looked in California, it wasn't the main reason, but supplementary reason, is that we can work there year round. So more action coming out. We couldn't get a lot of news flow coming out of our Canadian projects in the winter because it's not the kind of work we need to do. The snow's got to be gone. But I guess coming into the spring, we'll be following up on those results, getting work on the ground done, hopefully making some new discoveries on the ground, similar to what Puma's been finding on our property by just following up on our soil samplings and tracking what they're doing. And the same thing in the Yukon, but there'll be a couple of months in between you do that. I guess a few things are corporate-wise. We've been merging two companies. We were looking at getting a new website. We understand we are very aware of some things. You drop some balls because we're picking up some really good ones, and our website needed some work. Our marketing, we weren't doing a lot because there's no interest. We feel there is now. Doing a lot more marketing now. So things like that, getting this, working hard on that.
Great. Well, I'd like to again thank you very much, Kim, for presenting Stratabound Minerals Corp today, and thank you everyone out there for tuning in and for your questions. Just a reminder that Red Cloud Securities will be back tomorrow afternoon when we present Defiant Silver, Thursday, February 3rd at 2 p.m. Eastern Time. Everyone have a great rest of your day.
Thank you. Thanks, everybody.